Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today market is pretty much flat here on the S&P. As you can see, Nasdaq is also flat. Semiconductors down about 1% there. Dow's flat. Russell 2000 actually led the market today with the 1% performance. Banks pretty much flat there. Energy about a 1% positive. Transport up a little bit. Biotech pretty much flat. Pharmaceutical up a little bit. Emerging market down a little bit. Grayscale Bitcoin did get hit today, down 7% there. Gold, silver, and the miners are down about 1% each. About dollars up a little bit. Oil's up about 1%. Treasury bond up a little bit. And we got VIX pop today with 4% positive. Let's stick with the spider 65-minute chart here. So quickly, let's do a little quick recap from what we talked about in the last night's video, that we were expecting to see some sort of gap up today. We actually saw the gap up, but we weren't able to hold it above the pivot there. And also we talked about Shenanigan always being in the market. It doesn't matter which day or which month, which week. Shenanigan's just there just to kind of rattle you out if you're too intimate with the micro-term fluctuations. But also we talked about it, should there be any kind of slide, should there be any kind of fluctuations, we're going to look at 420 and 421 as a potential support there. So you can see that despite the fact that we did see a gap up and faded and continue lower on the second hour, you can see that buyers actually did protect it. About 75-80% of this gap here, right? A little bit was filled, but almost 80% is still open, and we want to favor the buyers. It is no mistake. It is no coincidence. It is not a mistake, or it is not a random occurrence that in the second hour, when this thing did come back down, you can see that buyers worked really, really hard to make sure the price stay above my short-term moving average. You see that right there? This is how the buyers can keep that bullish momentum going. So first hour gap up, faded it. Second hour came all the way down. Bears are threatening to break below this short to micro term support. But there's a gap area there, so you can see that at one point intraday on the second hour today, it looked pretty bearish with the gap up and fade. Some bulls might be freaking out at this point. Some bears maybe get too excited. And then you can see that we came down, met with that gap area, which is going to provide cushion, which we talked about yesterday. And bulls worked really, really hard to bring up the price above the short-term moving average. And then there were some fluctuations on the second hour, but we managed to stay above the short term. And guess what happened on the third hour, right? You can see that buyers stepped up and brought it up. And so you can see at the end of the day today, buyers were able to hold this prior resistance as a new support and protected this gap. And this is what I mean. This is a perfect representation when I say benefit of the Dow goes to the buyers in all terms, right? It never means we're not gonna see any kind of shenanigan. It doesn't mean we're not gonna see some fluctuations. It doesn't mean we're not gonna see any red candles. All of those is gonna be there, but in an event that we're gonna see some sort of shenanigan, we wanna give benefit of the doubt to the buyers that in certain levels will act as support, and bulls will bring it back up here. So you can see that this is current supply zone, and you can see there's some jitteriness with the short-term traders in that vicinity. They're nervous, anxious about that area, because you can see, I think what happened was, the candles are great because they tell you a story. I think a lot of people who went long at open right here, they patiently waited it, and then when the price got back up towards the end of the day, I think they exited. They're like, you know what, I'm gonna take, oh my god, I cannot handle this shenanigans, man. I'm just gonna exit my position. I'm gonna break even. Oh, what a heart, throbbing, heart sinking stuff that we gone through today, and then I think that's why it acted as quick short to micro term resistance here, because there was an attempt to make a move, but it looks like last hour there's some selling that occurred. So on a closing basis, on this hourly 65-minute chart candles, we were not able to break above. If you go to line chart, it will be more clean. So you can see if we go to line chart, it's definitive that we never closed above this resistance yet. This is 422.70 or so. So that's the current resistance. And so obviously buyers want to get back up and break above it. What buyers need to do is to get above this level and stay above it for the first 2 hours. If we do see a gap up tomorrow, let's say if this thing comes up and gap up here, we want to hold that gap, stay up above it for the first 2 hours. If we see something like that, that gap is going to become more rigid, more robust. You know, we don't want to see something like this, what happened earlier today, this morning, where it gaps up and fades right away. So it's important that we see follow through. Let's check out that oscillator and see if we can extract any more information. So, quickly, we've been following up. We talked about this setup right here. So this is that setup that looks very similar to what we saw back in March 26th, right? We saw that oscillator building energy. Energy's been released to the upside. Similar thing happened here. So what happened was we saw that little pullback right there, and I believe we might be seeing something. And that's that little volatility here, and that's a little volatility there. You can see how when you zoom out, whatever you thought, the craziness you thought was happening earlier today, it's absolutely nothing. It's a little blip. If I go to daily chart, it's nothing. It's just a little tiny movement that we saw. But some people was just panicking left and right. So we want to understand a bigger term. So I think there's a good chance you can see maybe potentially using this prior resistance as new support on that oscillator, similar to what we saw here. But we definitely need to see that oscillator crossing to the upside. Did we see any kind of cross? Let's kind of examine here real quick. Officially, we did. However, because of that last hour fade, it's not looking very confident. We wanted to see that, that fast line, making a move to the upside like that and spreading up. But right now, you can see that fast line here. It kind of curled down. So right now, oscillator is still at a neutral level. So what we really need to see is a follow through in the first 2 hours and stay above this 420.50 or so level. And if we can see something, again, tomorrow, first 2 hours is important. If we can see something like that, you'll see this oscillator getting back up, and there might be some rallies we can enjoy if you're a buyer here for the next week or two. But we also have to talk about, should there be any kind of another shenanigan, right? Buyers, make sure to protect this gap. If you're a seller here, you want to see that this being the temporal top, at least for the month of January. First things first, buyers need to fill this gap. Remember, the longer these gaps stay open, the more hectic it's going to be for the buyers. It's going to favor the buyers. Remember, there are these attempts that the bears trying to fill these gaps. They failed to fill this gap. Even earlier today, they failed to fill it. So the longer these gaps stay open, the more it's going to favor the buyers. Let's see how the market plays out tomorrow. We'll go from there. Enjoy your evening and good luck trading tomorrow.